I just had a voice in my ear saying, I think we're live. I think we are live.
We are
We
live.
are live. Good morning and welcome everyone to the second Mortgage News Live, coming to you live and direct into your beautiful pearl-shaped ears. Thank you again to our sponsors, MPowered, the Intermediary, and of course, Newspage, for having faith that the first one went well enough to have me back. Another packed agenda this morning in a week dominated by sticky inflation, further rate cuts, a couple of rate increases, awful retail sales data, but still a seemingly busy market for brokers. Elsewhere, the government have had their latest bright idea to solve the housing crisis by offering 99% mortgages. Yay! Whilst the whole subject of conditional selling by estate agents has reared up again, taken up by the consumer champion himself, Martin Lewis, in a recent poll. Then we have the whole discussion on AI and tech. The robots haven't got us yet, but is this getting closer to inevitability, or is it still a load of old bollocks? All these questions and many more will be discussed with our lovely panel this morning. We have Stuart Cheetham, who's the CEO of MPowered. Welcome, Stuart.
Morning.
Raza Sadiq, Head of Operational Risk at MPowered. Welcome, Raza.
Thank you.
The legendary Ying Tan, CEO of Habito and the author of a very good book, which I have read, Don't Push Too Many Trolleys. Welcome, Ying.
Thank you. Morning, everyone.
I'll get a percentage of any further sales on that plug. We also have, representing our lovely broker community, Gary Bush, Director of MortgageShop.com. Welcome, Gary.
Morning.
And the wonderful Hannah Bashford, Director of Model Financial Solutions. Hello, Hannah.
Good morning.
So, right, lots to get through in the next 40 minutes or so. So let's start off looking at the key economic data, because everyone loves a bit of economic data, don't they? So last week we saw inflation edging up a little bit, but it was a blip that doesn't seem to have thrown too much of a spanner in the works, with many lenders continuing to cut, and some of them quite aggressively. But it is a bit of a topsy-turvy environment, isn't it, in terms of some lenders? You know, we've seen swap rates actually increase a little bit, and I hear one of the big six is going to hike slightly this week. Stuart, if I can start with you, if I can, what's your view on the environment at the moment where inflation is concerned, and how is it affecting you in terms of pricing?
Yeah, I mean, I think it's it just shows you how fragile we are at the moment, really, around the economy and sentiment around the economy. So we obviously saw a blip upwards, which is probably not particularly meaningful, and there's still the inflation is still on a downward trajectory. You read all the articles about that, but swaps have actually gone up on the back of that, not materially, but they have gone up on that. I think what we're seeing at the moment is the market is, I mean, remember, a swap curve is a sentimental view of what money is going to cost. It's not a factor, it's not a mathematical equation, it is what sentiment it is in the future. And at the moment, the market's telling us there's going to be rate cuts over the next year or two. That's what it's telling us. And if we see positive movement, I'm sure that's going to be correct. However, in this year of a general election, it's very fragile. If we have some more blips on inflation, if we have some more crazy ideas that create uncertainty, if we have yet again another global event, it can change really quickly and the swap rates can go back up. And immediately what you'll see is mortgage rates will go back up. What we've seen from lenders overall, though, is really, really aggressive pricing. So they've come into the marketplace, rates have come down, they've hedged a position, they've got cheap money relatively at the moment, and they're pricing down like that. And if you look underneath the bonnet of margins, you've probably never seen such thin margins in the last 12 months. It's really super, super aggressive. They're buying market share up and stuff like this. So until we actually see a change in sentiment, positively, negatively, or an actual change in the base rate, I think we're pretty much at a low of mortgage rates. Should they be going up? rationally, they should absolutely be, mortgage rates should absolutely be going up at the moment. And they probably will do if swap rates stay where they are over the next 6 weeks. Not materially, 10, 15 basis points, something like this, but they should be going up with a reflection of what's going on in the marketplace. Whether this market acts rationally is a completely different question, though. So we might not see that because lenders will continue to squeeze their own margins because they're buying market share at the moment. So that's kind of backdrop. For us personally, it's an incredibly difficult time to price. We are pretty competitive, I would say, across the piece. To maintain that's very hard. Maintaining margins incredibly difficult at the moment, and staying competitive is a challenge for us at the moment.
Yeah, it's interesting, and actually, if you counter that inflation stuff with the latest retail sales data that's come out, which was pretty woeful, really. Could that be a good sign for borrowers? Because it's basically highlighting to the Bank of England the real state of the economy on the high street, and there's a lot of people who say, "Oh, the Bank of England are out of touch. They don't really understand what's happening out there." There's a report that there'll be nearly 50,000 businesses which are close to insolvency, which is another reason for no more base rate hikes. Gary, how are you translating all of this to the information that you're giving your clients, and how do you advise in this area?
It's been chaos. I call it 18 months now, and we've had 18 months of chaos. And I've been around since 1988 at the coalface. I just can't work out, how bad it could possibly ever get. That's probably it, I think, before I retire. Clients are all over the place. They haven't got a clue, and they look to us, for the information that they think we're supposed to have, but having historically not seen this, recessions and everything else. I mean, this is just unique stuff caused by, we don't really know what. I mean, was it trustonomics? We just don't know, do we? There's deeper forces here, but how we get to clients on the same page is we tell them literally that it's a chaotic market, and that things will be changing, and we just can't predict anymore. The predictions are gone. I mean, like with the high street lender that's about to increase, that's just horrendous. We just don't need it.
What about yourself, Hannah? How are you seeing it?
Yeah, I think the biggest challenge for us as brokers at the minute is just the speed at which all this is changing. So, you can tell a client one day that they've got a rate, and then like Gary says, the next day that high street lender might be pulling their rates, and that client's not even had a chance to consider what you've told them before you're having to go ahead with an application. And that's really challenging. But I think in the way the market is going up and down, the only thing as a broker we can do is advise them on the here and now and what's available at this moment in time, and then monitor it. We're sort of advising our clients 6 months before they've got to remortgage, or if it's a purchase, we're looking and re-looking at what they've got and what interest rates we've secured them at that moment in time, to then assess it to the very last minute in some cases. And that just ensures that, at each moment in time that you've got contact with your client, you're getting them the best deal. And that's all you can do, really, I think, at the moment.
Yeah.
Monty, I was just going to...
go on, Ying.
No, I was just going to chime in and say, Gary referred to it as chaos. And I know you've been a big advocate of mental health within our industry. And, it shouldn't go... unnoticed how hard mortgage brokers are working tirelessly to work for their customers, and the challenges they have when through no necessarily faults of lenders, but when rates are pulled at short notice, and you're getting pressure from getting commitment to those rates before they go up by significant amounts sometimes. And certainly within the world of Habito, I see how hard the mortgage advisors and mortgage experts work. And you've got to take your hat off, over the last 12, 18 months, in this environment has been really challenging. And, it's really good that we're much more vocal about support within our industry from a mental health perspective, because, I have seen a lot of people burn out in brokers in the last 12 months. And, on a one-to-one basis, supporting other colleagues, friends, and advisors within the industry, there's a lot of cracks underneath, and we need to look at that closely.
Yeah, that's interesting. You mentioned that because where I am at the moment.
Sorry, Monty.
Sorry, Stuart.
Just to put a data point on this, if you look at our completions in December, 80% of them were completed on a rate they weren't submitted on.
Yeah.
That's a great stat.
That's crazy. Wow. 80%.
That's a brilliant stat.
Yeah.
Actually, that's not a brilliant stat at all, no.
No, I know.
It's not brilliant. The meaning of it isn't.
It's an interesting stat.
You know why that's not a brilliant stat? For two reasons.
Yeah.
For two reasons. That's because there's a huge amount of broker rework going on there.
Yeah.
And that doesn't necessarily mean that's just one rate reduction.
No, exactly.
Exactly.
But also that's cost the lender money because they bought money at the wrong position because they're only going down, they're not going up. So the good news for consumers is they've got like a cap on this. They can never, you advise a rate 6 months out and it will never go higher. It can only go down at that point because the mortgage charge has guaranteed this. But that means that's a cost. Someone's paying for that. That's a free option for a consumer, and lenders are paying for that. And ultimately, that's going to wash through into higher rates longer down the line for mortgage borrowers at the moment. And it's a good thing. It's just a reflection of how the economics of that work. But that is the extent of it at the moment.
Yeah. And I was looking at our queue earlier, Monty, and about 30% just today. 30% of our submissions are all rekeys, which is a huge burden on the team. But we're getting better outcomes for customers, which is great, of course. Very interesting.
That's what brokers do. And I was going to say actually where I am now is my next meeting straight after this is the mortgage industry mental health charter meeting for the steering group. So if you haven't checked that out or got involved with it, then I urge everyone to do so. Just to say also that we do have a comments section. So if you want to make some comments or ask some questions, I'll keep my eye on that. So please do engage. That's good. Rohit, has just said that 80% stat tells the whole story of 2023, really. I know Dominic has put a question in there, which Dom, can you reword that question in English? just about swap rates and I guess it's really whether for lenders swap rates are really that relevant. Are they the be all and end all in how lenders price now, and how much do lenders take note of it? I mean, for me, I have said, Stuart, that it seems that there must be a better way for lenders to price, especially at the moment, because we are seeing some changes in swaps, but we're not seeing the same changes we had, say, a year ago, just after all the Trussonomics rubbish that went on. So is it really necessary for lenders to price 2 or even 3 times in a month at the moment?
Yeah, I mean, it's a tricky one, really, because, I mean, if you don't, I mean, particularly when you get to the bigger lenders, their hedging strategies vary. So there's the direct correlation is hard to see because sometimes you can self-hedge by using retail deposits, and these are complex mechanics behind the scenes. The reality is, if you don't hedge, you're taking an interest rate risk, and that's an interest rate risk that the banks simply won't take. This is things that the PRA would just be very uncomfortable with. So the fact of the matter is banks will consistently use hedging mechanisms to manage risk within their portfolio. So the reality is they will continue to use it. The problem is the swap rates are sentiment, the thing. It's about what market thinks. It doesn't necessarily mean it's fact. I mean, the great analogy here is if you think about Love Island and about how voting works on Love Island, particular week, whoever's most popular or says the funniest thing or the quirkiest action, all of a sudden popularity and sentiment changes. Then next week somebody does something weird and their sentiment changes. What's changed in the world? Actually nothing, but that has massively changed. This is where we are with swap rates at the moment, and it's a bit of a give me some license with that analogy, but when news comes out and people are looking to price these things, this is exactly what's happening in the marketplace. And it's a reflection of the fragile nature of the economy and the uncertainty. And we're going to see more volatility. It's not going to go away, I don't think, until after the general election. And just remember, and when I say all this, nothing's actually changed. Interest rates have not changed for some time now from the Bank of England, but the swap rate has. And why is that? It's because people think different things around what the market's going to do. And that takes out interest rate risk for banks. So unfortunately, I don't see that changing. It's something we're going to have to live with. Brokers, it causes a huge amount of work for brokers. Absolutely. It causes a huge amount of work for lenders as well. It's not ideal. But the only good news I'd say this to summarize is the consumer is protected here. The rate only gets better. And it's causing work for us as an industry, but at least we know the end customer is getting the best possible deal through there, particularly if they're working with a good broker that is actively looking at these things.
Okay, very good. Thank you. And talking of elections, the government's latest brainwave is all around, let's offer 99% mortgages. And, I guess with, you've got a smaller percentage of younger voters looking set to vote Conservative in the next election. You can see why the government is finally keen to address one of the key areas that younger voters are concerned with. And it is about time that housing becomes front and centre. So I guess, in theory, 99% mortgages could help some people struggling to save a deposit, but there are so many questions around affordability calculations, interest rate costs, capital adequacy rules for lenders. Will it be subsidised by the taxpayer like the Help to Buy scheme to help entice lenders offer them? And will they just increase house price inflation because it's another demand-sided policy? Hannah, what are your thoughts on this latest brainwave?
It baffles me, if I'm honest. I mean, I can't. Like you say, it's potentially going to help a few people in certain circumstances, but I think what it's actually doing is it's a sticking plaster for the symptom of unaffordable housing, and what it's not addressing at all is the cause of that unaffordable housing. And it's potentially going to have an effect of pushing those house prices up even more, which then creates an even bigger problem. So I think it's being looked at as a short-term fix for a very, very serious problem that we have in the UK with unaffordable housing.
Gary, do you think your clients would, they'll be swamping the phones to grab a 99% mortgage?
They always are. The problem is I've seen 100% mortgage lending, and to be honest, I agree with 100% mortgage lending. If the clients are factoring in the increase in rates and worse terms, rather than delaying to save a deposit, which to be honest is an impossible game now. I think 99% is just a gimmick, but we know personally that lenders are about to go to 100% anyway. The government just needs to sort of focus on low-cost housing and building, decent properties that aren't. I mean, Help to Buy didn't do anything for the industry apart from increase the property prices on those new properties. And if you're dealing with a Help to Buy remortgage now, they're tricky situations because the values are coming in all over the place, and it's terrible timing. So for the government to be meddling again after what I see a failure on Help to Buy really is stupid news. Lenders are going to do it on their own. The lenders are grown-ups. They know that they've got to get help to people. The government should stick to building houses or assisting building houses, to be honest, low-cost ones.
And someone's put in the comments, 99% mortgages. It's a Skipton mortgage 2.0. It only really works up north. Ying, is that something that you see?
Yeah, I mean, Habito's national, but we have a strong presence in London. And the reality is, there's no point only, having a 1% deposit if you can't get a 99% mortgages. Interest rates are going to be high. The criteria is going to be really tough. The underwriting is going to be stringent. So the devil's in the detail, right? As a headline grabber, absolutely. excellent. Of course, we all want to help first-time buyers on the ladder, but there's, as Hannah mentioned, there's fundamental issues that need to be tackled alongside this. And the first place to start is what can we do to get more affordable housing? And I think might get some votes, might reel people in. The reality is, I'm not sure how many will actually end up being able to get the 99% mortgage, and therefore will end up putting probably a little bit more in than the 1% in. But the thinking is right. We've got to think of ways we can get more people onto the housing market, especially first-time buyers. We all know how difficult it is. Mum and dad is 5 kids. I speak from the heart. Can't and won't be there for every kid. So there's got to be other ways. We've got to do things right.
From a lender's point of view, when you see stuff like this, does it do you go, oh God, not again? This is another thing we've got to deal with, or do you sort of rub your hands and think, oh, excellent, this is something we can proactively get involved with?
Neither really, because I don't really believe the hype around it. I mean, look, as an industry, we treat symptoms, not causes. It's just we just do this. I mean, so I don't believe we've got. Any political party is not going to come and actually fix the housing problem. It's a big problem. It's really difficult. If it was simple, we'd have done it. So we're going to continue to create these symptoms. What I think is I look at this, I think it's good personally, and it might be slightly contrary view. It's never been more important, in my opinion, to get mortgage advice. So I just bought a house in December. I took a mortgage advice, very good broker did that for me. And I genuinely bought a different product than I would have bought if I'd done it on my own. That is absolutely true. Never been more important. What we need to do is empower advisors to have choice for their customers. So I thought the 100% thing from Skipton was a brilliant idea. Okay, only 3 people in the market will buy it, but it's still for those 3 people the perfect product. I suspect this product, albeit very small demand, real demand, when it's properly advised, it will still help in the marketplace. And we should be giving options to advisors to make sure they're tailoring their advice as best they can to individuals in a really, really tricky marketplace. So I think that's good for that reason. Tricky for brokers because they're going to get more options. It's harder to advise and stuff like that. But I think this empowers that process a lot more. So personally, I think in a world where symptoms are going to be treated, not the cause, I kind of embrace innovation and I embrace new things because it can only be better for the consumer.
Exactly. Yeah.
Okay. Good. Oh, I like that. That was a strong speech, Stuart. I like that. I mean, for me, I've always said the housing market needs long-term cross-party solutions, a housing minister in situ for the duration and just more than empty platitudes and half-baked schemes.
Now, how many ministers have we had in the last 4 or 5
minutes?
years?
I think we've had about 16 in 13 years, haven't we?
Exactly.
That's a stat, something like that. It's crazy. So I am very aware that we're actually here to talk about technology and AI, and Raza is waiting in the wings there, eager to talk about all this. So there's been so much written about AI and ChatGPT. Actually, I've just upgraded from ChatGPT 3 to 4. I'm paying my monthly thing, and it was really interesting. Yeah, I managed to design an album cover last night from scratch. It's brilliant. Wow. But anyway, that's something.
Well, you didn't do it though, did you?
No, I didn't do it. No, I just put in the it took about
facilitated.
2 seconds. Yeah, I facilitated it. So yeah, I'm claiming it. So there's been so much. The problem with all the technologies, you hear so much. It's really hard, especially for us as brokers, to really know what's truth, what's fact, what is going to happen, how is it actually going to be used to support brokers, and what's the future. So Raza, if you could just give an overview of MPowered's criteria GPT, what does it do? How are you working it? And what's the idea behind it to make processes efficient for brokers?
Well, I think the main thing we need to look at is the outcomes of what we've actually achieved as a firm. And what the criteria GPT does is allows us to answer a lot of the questions that are asked by the brokers right at the beginning. So, and what we've done is we've made sure that all of those answers are correct, legitimate, and it's being answered correct. Those questions are being answered correctly. So there was a huge testing phase that we went through to make sure that that was actually done properly. The governance piece was a critical factor. We made sure that was tested across the firm internally and with a limited amount of broker communities. Once that happened, make sure that those questions are being properly answered, we then went live with it. And it's really been amazing what we've been able to achieve. When Stuart will talk about some of the numbers. They're fabulous, but with regards to just generally seeing that 54% of all our queries are now being managed through that process, allowing our broker sort of support teams to do much more proactive work. So instead of being reactionary, they're becoming much more proactive, enabling the journey that the broker's going through with the customer to be that much better and quicker. I mean, going back to what everybody's been talking about with regards to the chaos and the cost element and the margins, as Stuart was saying, so thin, this becomes even more important for people to take this on and do it right in a right way. I think the main thing where I'm coming from an operational risk point of view, is we should do it in the right way. So I'm Stuart's control person. So to speak.
That's a big job. So how do you police this thing then? Because we've seen so many comments about AI is dangerous. How do you actually police it?
It's not dangerous at all. I think one of the things is also where the data is stored. The data is stored within the UK. So from a GDPR point of view, from a compliance side of it, it's a bit boring, but that is held within the UK domain servers, which is very important. Number one. Number two, we need to make sure that the criteria GPT, it's cross-referencing our lending policy, which is critical to make sure that our credit lending credentials are, adhered to predominantly. We have a very robust quality assurance piece as well, which also looks at how the questions are being answered or tackled. But even before we go there, we make sure that the lending policy is being referred to. It's quite simple, but it's complex because the lending policy itself is very nuanced. And what Stuart and the management team is focusing on is to make sure that our offering is customized and not just standardized. So that brings more challenges, but it's not undoable. And we've sort of proven that. I mean, our team has proven that. It's quite amazing. And the speed, everybody's talking about the speed, how things are changing. What Hannah was just talking about, it's just, and the impact that it has from a mental health point of view as well. So this technology actually helps alleviate some of that. It doesn't create another operational risk. It manages the operational risk from a mental health point of view as well. So I mean, looking at the emotional side of it, does that make sense?
Yeah, that's really interesting. And I guess actually we just had an interesting comment, Stuart, on ChatGPT. So that chat for criteria will only work on the published lender criteria. So what about the non-published criteria that, as brokers, we love to work in some of the greys, don't we? So even though we know that MPowered, we know that they will do something, for example, when potentially it doesn't say you will in your criteria. How do you adapt to that, and how excited are you generally by this movement in tech?
Yeah, so I mean the results have been quite phenomenal. So not to get too technical, but we will blend in public and non-public data into our version of this to increase levels of answers to this. Now, what people might not know, we have a separate business called MCube. We license our technology to other lenders. So we're in talks with lots of lenders about selling our criteria GPT technology to other lenders to help deliver a better service for brokers across the whole marketplace. And one of the common things I get told when I speak to those people about it is this non-published data actually isn't in a manual anywhere. This is in underwriters' heads, completely informal data. So that first of all, so even when you go to Knowledge Bank or somewhere like the Criteria Hub, it's not there because it's not actually written down anywhere. So one of the things we do with lenders, and we do this ourselves now, is more and more we're perfecting and trying to publish as much of this as we can. Some bits you've got to keep behind the scenes because of certain, financial crime issues or stuff like this. But we can hold non-published data into the system as well and be able to advise on that system as well. And the probably the most important thing around it, our platform will say when it doesn't know or doesn't want to answer, it can say no. Where ChatGPT will just answer. There is no in that process. Yeah. So this it's a good question, and so we are increasing the ability to do that. But the bigger problem is, particularly when we speak to other lenders, is that information is not in a machine readable form, and therefore they have to create that into a machine readable form for it to be working. So there's a challenge before AI can work, as in so many times. Yeah.
Yeah. So from a broker's perspective, how Gary or Hannah actually, or Ying, how do you approach all this technology? Are either of you using it? I know Ying, obviously, Habito were born in a crest of we're going to change the world, and I know things are very different now of what you're doing, but actually I'm interested on the ground. Maybe Gary, from what are you using now, technology wise, to make things work better, and what are you excited about, and what are you fearful about?
No fear here. Excited is all I am, really. We had a situation where we had 3 offices in 3 different parts of the UK, and we needed to try and streamline. This was back in the late 90s, to try and streamline our data so that everyone knew what was going on. So the client could just pop up anywhere, or a call could be answered in any service office, and it would be in front of them. And back in sort of 1998, it didn't really exist. There's no system now that does it. So we had to build this system. We're 26 years in now, and seeing that we can take an open banking feed and analyze to death 6 months bank statements in about 3 seconds is quite exciting. So it saves us from having to. I mean, I've personally been dealing with bank statements all my career, and it's the most boring job ever if you're looking, and it's a total waste of time. So to use an AI, I mean, we've got 700,000 lines of code now in our system, which does all sorts of strange things. But it just takes a set of bank statements, analyzes what they haven't told us, like loads of commitments that we don't, get disclosed. Also bounces, there's all sorts of things going on. We also take 4 credit reports and analyze that to death in about 12 seconds. So it takes me in a position where I had to sit down and literally do hard work to try and find out all the wrinkles of a case. A lot of that heavy lifting is now done by our code. And, there is no AI. Depends on what you believe. I mean, machine learning is something we all are hoping to achieve. AI is just, we tell it what to do, we give it some fences to work inside, and it goes and does it. It's not really taking over the world, it's just making our jobs much easier. But for a broker perspective, all the boring stuff can be taken away quite easily.
And Monty, I think Gary hits the nail on the head here, is that the technology really, from my perspective, and this was my thought long before I joined Habito, is it's there to do the heavy lifting. I've been quoted 100%. A number of times talking about the Iron Man analogy. The technology should be there to make the human faster, stronger, and more efficient. Long term, I think we're naive to say that AI, we won't be completely replaced by robots. We had an offline chat earlier. Stuart talked about the analogy of a car. A driverless car, if they can do a driverless car, you bet the bottom dollar at some stage in the long-term future, if not even sooner, their mortgage advice could be done there. But are we going to have a world whereby, now where you meet a virtual advisor, as soon as that happens, virtual AI advisor, 1 second later you get a full recommendation, and then the seamless operation to get your mortgage offer within seconds. We're way off that. But that said, there's some really good technology. MPowered are leading the charge very much from a lender's perspective. We're trying to do a lot at Habito as well, to make that process quicker and more efficient. And there's a lot of repetition that goes on in our broker world, and there's a lot of duplication of entry. That's unnecessary. And what we need to do is spend more time advising our customers and adding value to our customers, rather than doing mundane, data entry type work, when we could be giving better value to the customers and getting better outcomes. And therefore, from my perspective, running a relatively large digital mortgage brokerage, it's about productivity and how we can increase our productivity as a business, which can ultimately benefit the client.
Yeah. So do you think we will ever automate brokers? There's a rumor that someone in our Newspage chat is actually a bot, but is there
only a rumor? Only a rumor.
I won't mention who to spare him his blushes. But Hannah, do you fancy being automated?
No. I think like everyone else has said, that there's going to be some amazing sort of options out there for brokers to help automate what should be automated already. We take bank statements, like Gary said, we analyze them, that we put that into an affordability calculator that then spits out what the client might be able to borrow. We then put that into another application. It's such a waste of time that I see these sort of technologies as really good ways of actually, one, reducing input error, so reducing human error by putting in misinformation, because if you're taking the information directly from a bank account, you haven't got keying errors and things like that there. So I see these things as really good, but I don't see that we're going to ever be complete. Well, not ever, like Ying said. I don't think there's I'd be misinformed to say that it's never going to happen. But I think for the foreseeable future, we're definitely going to be there. And I think, like Stuart was kind of hinting at, those grey areas for underwriting and the exceptions that we call up our BDM and go, look, it doesn't quite fit with criteria. If a bot was telling us no, we're in the situation of computer says no all the time. So I think that side of things is where we add value, and we can have those conversations, and you need the human input. I mean, I don't know about you guys, but the last 18 months, there's been a lot of counselling that I've done with clients as well, lots of that mental health side of things as well. It's just simply not there with AI. You don't get that human empathy and the value that we can add there, and the reassurance and everything. So yeah.
Yeah, and what about Raza from using AI or Stuart from other side of things in terms of marketing? Is that quite dangerous? Or go on, Stuart.
Before we jump onto that, what I'll just let Hannah know is this afternoon I'm having a demo by our data science team about a possible broker tool that will read bank statements for you in 3 seconds and fill your fact finding for you. So if that goes well, I'll drop you a little note tomorrow, and if you can have a look at that and see if you'd like it. And maybe
that would absolutely make my day, Stuart. Honestly,
yeah, I think we're all up for that, Stuart.
Yeah.
Well, so no, genuinely. So I mean, look, if I was a broker, I'd be a bit pissed off talking about AI, if I'm really honest, because there's so much tech talked about and none of it's really delivered. And I encourage our team not really to do that, to be quite honest with you. What we try and do is build tools that are actually usable in the marketplace, and it has lots of AI below it, but we don't bother telling you what the AI is, because do I know how a car works? To be blunt, don't. So, but do I want to drive one? Yes, I do. So we kind of focus in a bit on this. So this is a bit like reading bank statements. Absolutely. So we will, we may launch a broker tool for any broker, for any lender to read bank statements and tailor it directly to their fact find. That is what I'm looking at this afternoon. And that's a great example of where we can give really heavy, cutting-edge AI to a broker. They don't really need to understand what's underneath the bonnet, but it has a real practical benefit. So we would hope to save 20, 30 minutes a case. So they tell us. Anyway.
Stuart, why couldn't you have done that 3 years ago before I started coding it, for God's sake?
Are you just jealous he's got more lines of code than you?
We started 3 years ago as well. We should have just done it together. We'd have saved
exactly.
Absolutely.
Gary, you got more value in your business having written it yourself. So
yeah, we understand.
That's a really interesting question, actually. I know time is against us, but It's a really interesting question, actually. Habito, you're doing your thing. MPowered doing your thing. Gary, you're doing your thing. Loads of people are doing their things. From a perspective as a broker or even a lender, which one do you back? Which one is going to work? And actually, shouldn't we all be somehow working together to make sure that the mortgage process from start to finish, and in fact the house buying process from start to finish, is automated and that customer journey works? Surely there's more. It's better for us all to come together rather than try and do all our separate things.
And the problem you have, so we believe that. So we license our technology to lenders behind the scenes. So lenders can come and use our AI, and most of my time is talking to lenders, and also we build broker tools, Marketing Assist, Criteria GPT, Budget Genius is the latest one, and we're going to share this into the marketplace as well. But what you'll find is in the broker world, it's a cottage industry of technology. In that, I mean, that doesn't mean it's bad. It just means it's different over there. And you've got lenders who have got legacy systems, and trying to innovate and change them is honestly just a complete nightmare within that process. And you've got to be able to demonstrate genuine benefit and change before this really, really happens. And this is why technology hasn't really impacted the mortgage market. It's dominated by the big six who struggle to innovate, and there is no commonality between the broker community to a technology footprint within this sense. And therefore value has to be generated somehow to prove it. And I think AI will be able to do this. We hope to do some of this stuff. And then we'll share the tech with brokers. We'll share the tech with lenders. This is our whole strategy around that. But it's incredibly difficult with the ecosystem we see at the moment to be able to do that quickly. And that's why tech has struggled to really make a big impact in this industry.
Yeah. Just some interesting. Yeah, go on. Go.
To what Stuart just said. So Stuart, apart from legacy systems, he's so right. It's also the legacy thought in a lot of these firms that they don't think intuitively with AI. So this is where Stuart's encouraged all of us, both from the second line as well as the first line, but for the second line to work more cohesively with the first line to make sure that compliance, for example, helps Marketing Assist, make Marketing Assist that much more effective for the broker community. So we're seeing a lot of uptake in the Marketing Assist, but the more helpful hints that we can enhance it from an Mortgage Code of Conduct, sort of the compliance rules side of things, it becomes that much more powerful. So that's the other thing in terms of collaboration, not just outside, but even within firms. And I think we demonstrate that as a firm. So
some interesting comments here. Just to pick up on the feed. Some upfront information for estate agents coming down the line. Upfront Rick's home survey data can feed in, so be able to get decision in principle for a property as well as a person. And just some comments. A bot could replace the human input certainly on purchases when offering, or should be offering, far more than mortgage advice. The algorithmic advice is not advice and never will be. The only AI that can give advice is actual intelligence.
Well done, Mike.
Thanks for that, Mike. I like that. I might steal that quote. That's really interesting. So sort of a summation then is actually from all of you. It's about don't be scared about what's coming down the line. It's about embracing it. It's about making sure that it's used in the right way, that it's policed in the right way, and actually we can use it for good in order to improve the customer journey.
Actually, Monty, can I just say, I'd say that differently. I think it's the industry's responsibility to allow brokers and the users to use it seamlessly. They should not have to think about the change. That's the most important. We can't expect people to adapt things that are complicated, or no one will understand AI like the data science. It's not their job. Our job is to make it so easy that you don't have to think about the change. That's the key point, and that's what will make a real difference within the marketplace. I say to the team here, there's only one measure of success. That's when the mortgage broker tells us it works. That's our only benchmark here.
Absolutely.
So, and that's how we try and live that. And there's room to improve for us to do that.
Yeah. Thank you for that. Gary, any last words of wisdom from you generally?
I mean, if I look back at the last 18 months without our systems, it would have been an absolute nightmare. I do sympathise with paper-based brokers. I do understand why they are paper-based, because there are no systems, and the industry for technology is poor if it exists, and disjointed is what we all get. You know, really the industry needs to understand that we don't want to keep buying 10, 15, 20 different £20 a month contracts. We want to really have the whole thing integrated into one big kit.
100%.
And then data transfer from, you know, you'll have a long-standing arrangement with a software provider, and then, you know, a new system pops up and you can't transfer your data across without a fortune of cost. The industry really is not helping itself, which is why I've spent all this time and energy focusing on tech rather than really trading. And now we're looking at trading because we've got kit that saves us time and has dropped our staffing levels from 26 down to about 5. So we can now look ahead of the journey of, you know, I don't have to have the expense of people and the excuses of sickness and holidays because the code's always there for me. So,
Hannah, what about yourself? Any last words?
Yeah, I think I just agree with Gary there. You know, as a non sort of tech expert, as it were, at this stage, it would be nice to know that there's systems out there that we don't have to plug and play with 20 different options, and we're not subscribing to, you know, 20 different systems that should all be working together to offer a complete seamless customer journey. Because at the end of the day, this is about the experience that the customer gets, and, you know, our expertise sits at the back of it to give the advice. But, you know, at the end of the day, our customers use us for our processes, our expertise, and the experience that they have. So if we're having to, you know, mess about and use different tech that does different things that could actually be there used cohesively and give them a much better experience and help more people, then I think that for me is where I'd like to see it going, and there'd be a bit more potential sharing, like Stuart's saying, you know, and more joined up thinking, as opposed to everyone's sitting their own stool out and, you know, championing for themselves. You know, we need to be a bit more cohesive.
Yeah, totally agree. Ying, you can have the final words.
We need to embrace technology, but it's not going to be replacing us mortgage brokers anytime soon, but it will make us better, hopefully, and we should embrace that. And the key takeaway for me is collaboration. You know, I've been on panels and chats like this for too long, talking about technology. And we as I know you have, Monty, even longer. There's not enough that's done, you know, there's not enough collaboration. You know, we need to sit around a table, get talking, get collaborating, and really have a real focus of how the industry can move forward. I'm certainly up for that. I know others will be up for that, and but we've got to do it and execute and stop talking about it.
Yeah, absolutely. Well, well done. Thank you, everyone. Yeah, we look forward to seeing the latest developments from Raza and Stuart. It'll be really interesting to see. Thank you. Thank you, Stuart. Thank you, Raza. Thank you, Ying. Thank you, Gary. Thank you, Hannah. Thank all of you for watching, listening. An article about this live will appear on the Intermediary. I encourage all of you to get involved with Newspage. As I said before, the more voices we have out there, the better. It's really important that as brokers on the ground, we make our voices heard. If you have enjoyed it, please let everyone know. And I've been Andrew Montlake. If you haven't enjoyed it, I've been Jeremy Hunt. Until next time, have a great month. Take care.
Cheers.
Bye, guys.
Thanks, everyone.
Yeah.
Bye-bye.